Hello, this is Tom Cloud with this week's precious metals market update. I want to start talking about the demand being created in the East. We talk about it a lot, but now it's even more important as the Chinese prepare to go to a full-time 23-hour-a-day platform trading on April the 6th. And this is going to be very exciting, primarily because we won't have the paper fix from the London Bullion Market Association, the AIIB. In other words, we in the gold business feel we're getting ready to see a vast change of the prices being in spot price in actual trading than 6 banks sitting in London fixing the price of gold twice a day in what direction they want it to go in. If they want it to go up, they move the bids up. If they want it to go down, they bid it down. But this is getting ready to get broken. This is one of the first things the Chinese said 3 or 4 years ago when they first started getting interested in taking over their own trading platform is, number one, they had to go 24 hours a day, and number two, they had to be real physical prices. So now this is being realized on April the 6th, and really the problem's going to be with the LBMA is they're not going to be able to settle. They're going to have to be a lot of cash settlement, which is going to drive prices higher. When people say, no, I don't want a cash settlement, I came in knowing that I had a trade I could take delivery in at the end. So this is going to be very interesting to see if the banks keep the liability under the new LBMA rules and continue. But certainly from where I sit and look, and the friends I'm in this business with for over 30 years, we look at it as one of the first nails in the coffin toward breaking these price fixing that's been going on for some time. The next thing I wanted to mention is, of course, the AIIB, the Asian Infrastructure Investment Bank, that today on 3/31/15 is the last day that countries can make their application to join, as China now moves to the new CIPS, Chinese Infrastructure Payment System, CIPS, that will take over the SWIFT system that's currently being used in the U.S. And no matter how hard the U.S. politics to try to get countries like Australia and England and New Zealand and Luxembourg and France and Germany to stay in, they left and joined the AIIB that you'll be hearing a lot of from now on in the future. This system will be ready as early as September, no later than the end of the year, and it will cut the money going through the SWIFT system in the U.S. by estimates of 50 to 65%. Now think about that for a minute. When you've got billions and billions of dollars flooding through your system every day, and it's repeatable every day, and you're holding that money 2 or 3 days before you let it go out, you can go out and buy a lot of assets in what we would call a Ponzi scheme, using somebody else's money to pay somebody else and buying things. So the United States is going to have, it's like getting a huge credit cut. We're not going to have that money flowing through the system. And it's important because a lot of that money has been used as leverage on derivatives, the very instrument that's got us in the condition we're in today. So this is going to be detrimental to the U.S. And no matter how they try to paint it, this is huge in putting a nail in the coffin of the U.S. dollar, because they'll have no way to leverage derivatives. They'll have no way to use over 50% of the money that flows through. While on the Chinese side, they're talking about building a rapport with the third world countries, and doing what the system was really set out to do. So this is going to be a very interesting transition that will be very, very positive to gold holders. And let me follow that up by showing, and what I'm getting ready to show you, we'll be happy to send you, is the new world currency. And it's now got bulletin boards all over China showing, I'm not sure how this is reflecting, but showing you, and we'll be happy to send that to you in PDF if you'll just drop me an email to tgcloud@bellsouth.net, tgcloud@bellsouth.net. But now the boards are going up, the billboards are going up all over China, showing the new renminbi the renminbi currency that's going to be backed by gold, people, we're months away. We're a few months away from them resetting gold at a price much higher than it is now. China has been collecting and buying tons of gold per month for 5.5 years and have not reported how much they have. We do see export figures from China, from Hong Kong going into China, but we really don't know how much gold they've accumulated because a lot of it's not imported. They're the largest country mining gold, and the government is keeping the gold. So we will get numbers released at some time in not a too distant future, and overnight we're going to have a new currency. Like I said, it's probably not going to be called the yuan, but the renminbi, and we're seeing billboards around China about the gold currency already. So, it doesn't take a rocket scientist to figure out where gold is going. I can't tell if it's going to go down $10 next week and don't really care. The opportunity you have today to get the gold at the price it is unbelievable and will not be reoccurring after all these things happen late in the year, probably sometime in the September to December time frame. As we end the first quarter of 2015 today, gold is up a little less than 1%. Certainly nothing to brag about, but not bad. 4% is much better than any fixed products. But silver has been a great surprise. It's up 7.69%, or nearly 8% for the first quarter. And if you do that 3 more quarters, you're looking at over 30% for the year. And I do think that will happen. I do think you keep buying your silver at these prices as you can afford it. You keep adding to your portfolio as you can afford it, and you keep building up, because when gold takes off, silver's going to go with it and maybe even exceed it. So while the technical charts we follow today are not giving us buy signals in gold and silver, they're stuck in a narrow trading range, especially gold between 1180 and 1207. I've got clients that want to buy when it goes below 1180. I got clients that want to buy when it goes over 12.7. So you got everybody looking at it in a different way. But the standpoint you got to be looking at is you're going to have a hard time even getting it several months from now when a new gold currency comes out. The U.S. dollar starts plummeting, gold skyrockets, because we know from the year 2000 to the year 2012, gold went up over 12%. For every 1% the dollar went down. So the dollar only went down from 96, where it is now, to 92, about 5%. We can see gold go up 50 to 65%. Do I think it will happen? Yes, I do think it will happen. There's just too many things in place, and throw in the geopolitical issues. So we're going to try to stop that now, and we'll continue it next week. But if any of you have any questions, you can reach me at 800-247-2812. 800-247-2812. If you're interested in a self-directed precious metals IRA, call us and talk to Dan or Kathleen or I about it. We'll tell you how you can set up a self-directed precious metals IRA, and we can function as your broker in that capacity. So this market is getting excited, and we'll continue to do these videos and help educate you and keep you growing in your knowledge. With this week's Precious Metals Market Update, this is Tom Cloud signing out.